In dealing with debt, mortgage rates are at record lows, and it could save you thousands of dollars or even help you pay off your home faster. Let's bring in Greg McBride, Senior VP and Chief Industry Analyst at Bankrate.com. Hello, Greg, and what are your observations?
Mortgage rates have been at record lows, and this is something that's put some affordability in the back pocket of would-be homebuyers. It has resulted in payments that are $150 or $200 a month less than they otherwise would have been. However, the run-up in home prices has offset much or all of that benefit for a lot of home buyers. So housing market's really sizzling right now, in part because of low mortgage rates, but the limited inventory has been what's been pushing prices up.
There's so little difference between the 15 and the 30-year fixed. Is it better to go with a 15-year or a 30-year?
For most homeowners, the difference between the 15-year and the 30-year is that the higher monthly payment on the 15-year ends up being the deal breaker. The payment can be 50 or 60% higher than the payment on a 30-year loan. And if the budget's not able to handle that, it's just a deal breaker. Now, if you're, say, 7 years into a 30-year loan and you're looking to refinance, the idea of going to a 15-year and saving yourself 8 years of payments could be pretty attractive. But again, your budget has to be able to handle that payment that comes with the 15-year. For a lot of people, if you are, you have a tight household budget, or you're just not maximizing your tax advantage retirement savings options like a 401k and an IRA, you're probably better off going with the 30-year loan, taking that lower monthly payment so that you have the cash flow to invest for your future. Instead of saddling yourself to the higher monthly payment that comes with a 15-year and then restricting your financial flexibility because you don't have the spare cash flow to save or invest.
Well, everything you said is right on. I would add, though, with the difference between the 30 and the 15 at these record low rates, some credit unions, for example, are offering some great deals. I had a friend who's paying just $23 more per month, and she will pay off her home faster in under 15 years because of the credit union. So you have to add that in. Before you take off, what's your outlook for mortgage rates?
The mortgage rates have been at record lows, and while they may bump up a little bit as we move into 2021, mortgage rates are going to stay very low for the foreseeable future. I mean, we have an environment of low interest rates as far as the eye can see, plus the sluggish economic recovery is likely to keep a lid on mortgage rates. So even if you're looking at 2021 being the year when you buy a home, I think you can sleep well at night knowing that mortgage rates are not going to run away from you in the interim. The real impact of low mortgage rates has been on those refinancing. I mean, this is a way for homeowners to have been able to reduce their monthly payments $150, $250 or more dollars. And that is meaningful savings at a time when household budgets are tight and pay raises may have been very hard to come by this year.
Thank you, Greg. We always appreciate having you here.
Thanks, Angie. Appreciate it.
More Business First AM. Check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.